Yes. Welcome to FX calculation room. So stop before you open another trade. Watch this. 90% of traders lose money, not because they have bad strategy, not because they have picked the wrong broker, not because the market is against them. They lose because of what's happening right here. Point right here, like right what I'm just going to show you in the book of trading in the zone, master the market with confidence, discipline, and winning altitude. And today uh, uh, and today I'm going to show you exactly how to fix it. We are breaking down trading, we are just going to break down trading in the zone by Mark Douglas, the book that has qualified changed more traders lives than any indicator or strategy ever ever will. So let's just go into it. As you see in my screen here, I just want to pass you through, break down each and how the book, the concept, and everything. But that I just break down each and everything is. So if you're even interested with this breakdown, also just comment in the comment section or contact me directly or join my Telegram channel. Then also, if you're interested, I can just send it to you. There's a topic, subtopic called "Why Most Trader Lose." Why most trader lose is not about the chart. It's not about what's happening inside your head. 90% of traders lose money long term, but 10% traders consistently and profitably. So what makes the reason or 90% lose, the real reason people lose, and number one is they believe if they just learn one more pattern or indicator they will win. But the market is always uncertain. No system wins 100% of the time. And second thing, they let emotion, fear, greed, hope make their decisions. Are scared trader holds lose hold losers too long. Greedy trader exist winners too earlier. So you can just understand this. You can check. So sometimes you see, let me just weigh this loss. It will come on my side. And sometimes a greedy is also okay. Let me exit a winner. You exit so early before you are TP and everything. Okay. They take losses personally, like the market is punishing them. The market doesn't know you exit or doesn't target you. So the real example is John has a great strategy. He wins 60% of time, but after three losses in a row, he panics and starts changing his rules, mind, uh, trades like now. 60% strategy becomes 30% again. So maybe you were just 60%. Also, then sometimes you come with 30%. So you minimize your win rate percentage because his emotions took over. Uh, so John's emotion took over. That's why the win rate also strategy comes to 30%. So instead, we have to look it like this. We have to look. The market is a mirror. It reflects your inner beliefs right back at you through your profits and losses. So, Mark Douglas shows us that we have to look the market like this is the mirror we are just looking. So I have to reflect the inner beliefs right back at your through your profits and losses. So this is what we can learn from here. So as we can just shift from this 90% losers to 10% to be among these. So we need to be among these 10. Let's just go to the next page. The next page or next chapter is the market has no feeling. The market have no feeling. The market is not your enemy. It has no opinion about you at all. It cannot, and it don't have. what the market actually is, the market is just millions of people buying and selling, each with their own opinion. Every tick up or down is just someone else's decisions, not personal attack or on your trade. The market can do anything at any moment. No setup is 100% guaranteed. Price move price moves are now neutral information. Only your brain assign meaning, like good or bad. Uh, so don't do this. This is a wrong thinking. Wrong thinking. Wrong thinking is like this one. The market ran my stop losses on purpose. The big players are targeting me. I always get stopped out right before it moves. Oh, don't think like this, but think like this. Douglas is telling us to think. Douglas is just telling us to think that the trade hit my stop. That's risk management working. This outcome is one of many possibility. Next trade is a fresh start. To get that, a real example that Sarah places a buy trade on gold. The price dropped and hit the top loss. A losing trader thinks the market always goes against me. A winning trader thinks that was one of the trades that didn't work. My age still plays out over 100 trades. Some losses, completely different reaction. So same losses, completely different reaction. So how you treat your mind, how you treat you reflect yourself in market. Let's just go to chapter 3. Let's just see to chapter 3. Chapter 3 is just your mind is the problem. Your mind is the problem. Your beliefs and past experience create mental framework. What you see to people. Your beliefs, past experience create mental framework that filter everything you see. How your brain creates trading problem. Your brain was wired of survival, not trading. It avoid pain and seeks pleasure automatically. That's how the brain is like. Your brain was wired for survival. And when we come to past pain, to the next one, past pain trades create emotional memories. These memories makes you act irrelevantly, irrationally, uh, irrationally in future trades, even when the setup is perfect. So you just act emotionally. Even setup is perfect, you can just go without trade, or it is like that when it affects you directly like that. That's how we read from this book. Trade in the zone. You see what you want to see. You want to see what you want. You want to see what you see. If you are desperate for a trade to work, your brain will find a reason to stay in, even when the chart is saying get out. Uh, for real example, the hope trap. Mike bought Bitcoin at 45,000. It dropped to 38,000. His plan said exit at 40. That's the plan. But his brain said it will bounce back. He opted instead of following his plan, it dropped to 28,000. Hope, hope is not trading strategy. Oh, so you are out of your strategy. That's the real example. But the key insight, the market didn't cause the losses. The decision to stay in past of the top, past the top, or driven by fear, accepting the loss caused the loss. Oh my goodness. Hmm? This book is so nice. Let's just go to this way. Okay, thinking in probability. The single most important mental shift you can make as a trader. What thinking is probability mean? Every trader has a uncertain outcome, but over many trades, your age produces predictable result, like a casino. They don't know who wins each hand, but they know they will profit over 100 hands. Like we see here on percentage, winning trade 60%, 60 out of 100, losing trade 40 over out of 100. Net result win 2 onto 1 is to reward, 1 to 2 is to reward, still profitable overall. So in don't do this. So instead, I think this the thing, outcome thinking bad. This is the way you think bad. This trade must work. Judge every single trade as a success or failure. Get emotionally destroyed by losses. But if you just think like think good. Probability thinking good. This is one of the this is one trade out of the 100. Judge judge judges performance over a series of trader. Losing are just part of the edge working. So it is just way. The casino mindset. A casino doesn't cancel roulette after someone wins. They know over thousands of Spain. The house win. The house win. You will just you will you must think the same way. Each loss is just casino payout. Your edge still win overall. Yes. So let's just check again. Let's just check number 5, chapter 5, the core 5 beliefs of winning traders. The core, the 5 core beliefs of winning traders. These are the exact beliefs you must install in your mind, not just understanding, not just understand, actually believe. Uh, Number 1, believe that anything can happen. What it mean in practice? No setup is guaranteed. Always use a stop loss. Never risk more than you can lose. Believe that. Number 2, you don't need to know what happened next to make money. You just need your edge play out over many trades, not on this one trade. Number 3, there is no random. There is a random distribution of wins and losses. Even perfect setup losses sometimes. Losses are normal. They are built in, into the maths. Number 4, an edge is just a higher probability of one thing over another. Your edge is not a certainty. It is just a slight advantage repeated many times. Number 5, every moment in the market is unique. This trade is not the same at the last one. Don't carry baggage from the last trade into this one. Real example: believe in 5 actions. Lisa had 3 losses in a row. On trade 4, she hesitated and used half her normal position size because she felt it would lose too, but trade 4 was a bigger win. He passed losses had nothing to do with 4. Each trade is completely independent. Yeah, so let's just go to chapter 6. What is an edge? An edge is simply anything that makes the probability of winning higher than losing when applied consistently. This is the meaning of edge. An example of edge: moving average, crossover, support and resistance level, breakout strategy, RSI, divergence, risk to reward, minimum 1 to 2 minimum, trade only with the trend, news momentum, end of the day pattern. Those are the edges, and sometimes so there's people who are using trading robot nowadays. So most important point, an edge only works if you follow it every time. If you skip trade, exit earlier, or change rules, mind trades, you destroy the edge. You will not you are not trading the system anymore. You are trading your emotions. Real example: an edge destroyed by emotion. Tom has a strategy with a proven 58 win rate over 200 trades. But when he get a signal on Friday afternoon, he skip it, feel risky. That trade was 1 into 3 risk to reward win winners, but winner by selectively applying his hedge, he turned a profitable system into a losing one. The system need all trades to be produced the 58%. That's it. The rule: if your edge is valid, take every signal, take every signal, take every single signal. No exception based on feeling. Your feelings are not part of the edge. Wow. So nice, so nice, so nice. Let's just go to chapter 7: consistency. Real goal. Most traders want to make money. The real goal should be trade consistently. The money follows consistency. Wow. What consistency looks like? Some process every time. Same process every time. Sorry, same process every time. Same criteria to enter. Same stop loss. Same target. No impro, improvising. No improvising net. Number two, same position size every time. Don't let big when confident and small when scared. Consistent resizing is how the edge works mathematically. Accept losses without drama. A consistent trader doesn't get angry at losses. Losses are expected. They are part of the plan. Keep record. You can only know if your edge is working if you track every trade honestly. Trader A and trader B. Hedge wins, huge wins, huge losses, random resizing, emotional net rule broke. It just broke. Mindset consistent again, same process every time, net result, growing account. So the thing here to know more, the goal of trader is not to predict the future. The goal is to be consistent in applying a process that has a statistical age. That's what we have to take from this book as a breakdown like that. And then we come to chapter 8: fear versus confidence. Fear is the number, fear is the number of one enemy of the trader. Mm. It comes in four disques. Number one, number one fear, the four fear that destroy trader. Fear of being wrong causes you to exit winners too earlier, not enter at all, or not enter at all. Fear of losing money, FOMO, causes you to not take value setup or widen your stop loss, hoping price come back. Fear of missing out, FOMO, causes you to chase trades that already moved, entering at the worst point. Uh, fear of leaving money on the table. Fear of leaving money cause you to hold winners too long until they become losses. Real example: Apple stock breaks out. James misses the entry. He watched it is go up to 4%. His fear of missing more gain makes him buy at the top. It reverses. He sell at losses. The fear of missing out cause a real loss. So what to do? How to be how to beat fear? Accept, truly accept that any trade can lose. When you genuinely accept risk upfront, the fear disappear. You can't be afraid of something you have already accepted as possible. This is the fear and confidence. So you can just pass through that. Let's just go to another one. Building new mental habit. This is the good thing to do. You can't just think you can't just think your way a new mindset. You have to build it through repeated action. The habit builds progress. Identify the old beliefs. Uh, I can't afford to lose this trade. Write it down. Acknowledge it. Exit. Replace the new beliefs. I only risk 1% per trade. Losing this is fine. It is just one trade in 100. Create rule that emphasize the beliefs. I will always set my stop loss before entering. Follow the rule for 20 trades minimum. Repetition is how beliefs get installed in your brain. Follow the rule for 20 trades minimum. Review and adjust. After 20 trades, look at your journal. Did you follow the rule? What's wrong? Real example here. Maria used the move to move her stop loss whatever price goes to close. She wrote, I always move stop loss out of fear of being stopped out. She replaced it with a new rule, stop staying where it was placed. Period. After 30 trades of following his rule, the urge to move stop disappeared. The belief was rebuilt through action. Okay, okay, that's chapter 9. It go to chapter 10. Accepting risk, truly accepting it. Most traders say I accept risk, but they don't truly accept risk. Changes everything. What true risk accepted looks like. Before entering any trade, you know actually how much are you willing to lose. Example, I'm risking $100 on this trade. It gone then meant the moment I enter, when even if it is gone, so it is already gone, even before you enter, the way I understand it. You are mentally comfortable with the losses before it happened. You're very comfortable. If you can't sleep at night with this, if you can't sleep at night with this position open, your position is too big. Okay, a stop loss being hit doesn't make you angry. It was expected. Your stop being it means your risk management worked, not failed. Okay, that's nice. The risk paradox. Trader who refuse to accept small losses and up taking massive losses. Trader who accept small losses upfront protect themselves from being from big one. Accepting risk is not weakness. It is just the smartest thing you can do. Yeah, before and after accepting. Before, I just move my stop a bit lower. It will come back, hoping not accepting. After my stop loss hit, I lost 80. That is fine. It was part of my plan. What's that next trade? You just look for another trade. That's nice. Let's just look another two. Chapter 11. Being in the zone. Being in the zone. The zone is the mental state where trading feels effortless. This is where what all the mindset work to lead. What being in the zone feel like? No fear of losing, no fear, no overconfidence, following rules automatically, fully present on each trade. Yeah, no attached to outcomes. Each trade feels neutral. Losses doesn't sting. Win don't cause overconfidence. What this looks like is in real trading. A, a zone trader see a setup. They enter calmly. They set their stop. They let the trade run. If it wins, great. If it loses, fine. Then they immediately look for the next trade with the exact same calm energy. No celebration, no frustration, just execution. How to reach the zone. Generally accept that any trade can lose. Any trade can lose. Have a tested edge you fully trust. You have to have your strategy. If it's a robot or everything or anything, you have to have your edge. Follow your rules without accepting for many traders. Just follow your rules without exception for many trades. Remove the pressure of needing this trade to work. Think like a casino. Focus on the series, not the single trade. So make sure you, if you're interested with this, I can just send it to you for free, and you still read it. Also, you can read it yourself. I just go to another one. Your trading mindset map. Uh, this is so now the summary. Everything, everything in this study guide built toward one goal: consistency, fearless trading. The full Juno at a glance. Understand why you lose. Emotion, not knowledge, causes more losses. Stop blaming the market. It has no feeling, no opinion, no agenda. Rewrite your beliefs, your mental framework, filter everything you see. Think in probability. Each trade is one out of 100, not life or death. Okay, nice. Install the five core beliefs. Anything can happen. Every moment is unique. Define and trust your edge, and take every single it gives you. Be consistent. Same process, same resizing, same rule always. Eliminate fear by genuinely accepting risks before every trade. Build new habits through repetition, not willpower. Willpower. Accept risk completely. Know that the lows before you enter. No. Trade from the zone. Calm, neutral, present, fearless. Also, one of the sentences that summary is that hold the book is that the best trader are not the smartest. They are the one who have trained their mind to think in probabilities, accept risk completely, and follow their edge without letting emotion interfere. So thank you for watching this. If you're interested, just comment I need the book, and then call. You can just DM me. My contact are in description, and then I will send you this book for free, and then you can just read it on your own. Or if you can just like, you can just go and buy the book of the book of the book of so also, if you're interested, you can just go and buy the book of Mark Douglas, Trading in the Zone, so as you can just know how to treat yourself, to treat your mind, so as also you can be a good trader and profitable trader like anybody. In 10% in the, then you move yourself in 90%. Thank you for watching. See you in the next video.